So young age and good health is how you get cheap cover. The longer you wait, the more expensive it gets. As we get older and take on more responsibilities, it's important to make sure that we have the right insurance coverage to protect ourselves and our assets. From health insurance to life insurance and beyond, there are several types of insurance that is recommended for adults. I mean, there's so many. How do you know which is the right one for you? So in this video, we're going to go over some of the most important insurance types and what you need to know about choosing the right type of cover for you. Hi, my name is Yolanda. I'm a wealth advisor, and on this platform, I give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and build generational wealth. Now, as a fit and proper South African financial advisor, know that this video or any other content of mine that you see online is not financial advice. It's financial education. If you're looking for financial advice where we consider your unique circumstances, your goals, your risk appetite, you need to book a one-on-one appointment, and you can do that by clicking the link in the description where you're watching this video. So to understand insurance, you got to understand your personal risk. Personal risk and insurance are closely linked, as insurance is designed to help you manage and mitigate your personal risk. So personal risk refers to the possibility of financial loss due to an unexpected event, maybe a car accident, a medical emergency, a death of a loved one. All right, all those risks can happen, and if you're not financially prepared, it can leave you vulnerable. Now, insurance helps you to manage that personal risk by transferring the risk from yourself over to an insurance company. And when you purchase insurance, you pay a monthly premium or an annual premium in exchange for the promise from that insurance company that they will cover certain costs if an insured event occurs. So this helps reduce the financial impact of an unexpected event and provides financial security and peace of mind. Now, obviously, there's some rules involved in the type of covers that are available and the prices at which they're available. So, and there's a huge variety of products available. So that is why you need an advisor to give you some guidance on the most appropriate product for you. So it's important to consider your personal risk when choosing insurance, as different types of insurance provides coverage for different types of risk. For example, if you have a high risk of getting into a car accident, your job requires you to travel, be on the road, you're a rep, for example, then you have a different kind of risk that you need to take care of. Maybe you want to consider purchasing higher levels of auto insurance for your vehicle and increasing your life cover or disability cover, considering because you're on the roads, there's a greater chance of being in a vehicle accident. By understanding your personal risk and choosing the right insurance coverage, you can better protect yourself, your family, and your assets against unexpected events and financial loss. And for help in identifying what personal risk you carry, that's something an advisor is trained to help you with. There are several types of insurance: health insurance, car insurance, homeowners insurance, contents cover, life insurance, disability, income protection. Each type of insurance provides coverage for specific risks or needs. For example, health insurance or medical aid covers the cost of medical expenses, while vehicle insurance will cover the damage to your car or injury sustained during an accident. Life insurance provides financial support to your loved ones in the event of your death. Insurance is an important aspect of financial planning, as it helps to protect you and your assets against unexpected events and financial loss. So when choosing insurance, it's important to compare the different policies because they vary greatly. It's important to understand the terms and conditions of the cover you choose. In South Africa, it's pretty easy to get cover. You can literally call up a call center, answer a bunch of questions and get cover on the phone. It's that easy. But very rarely will you get comparisons over the phone, where you get a comparison with company A, company B, and company C, where you understand the pros and cons of company A, company B, and company C. And it's typically a call center agent on the other end, like literally parroting out a script, offering you a product. When you sit with somebody like me, an independent financial advisor, we have a relationship. It's a business relationship. If I am giving you guidance towards a product, it is my duty to service you for that product. Has your needs changed? Has your risk changed? Do we need to adjust this product? Do we have to reduce something? Do we have to take away something? So that's the kind of advisor-client relationship that develops as opposed to a call center. An independent financial advisor is not loyal to a specific company, but loyal to a client which we serve. Another thing to consider with call centers is the sales process. Pretty easy on the phone. Once a week in South Africa, you're probably getting a call from some kind of call center selling you some kind of insurance. But have you ever tried claiming from a call center? I mean, you got to go through a switchboard, go through a bunch of frustrating menus. You're on the call, you're on the phone for like half an hour, 45 minutes. If that's something that you want for yourself, the ease of buying and the hassle of trying to claim, plenty of call centers available in South Africa. But if you want a one-on-one relationship where you're getting guidance unique to your circumstance, we have a business relationship. I'm helping you with your claims, helping you fully informed, know what kind of words to use when it's time to make claims. That kind of guidance, you're looking for that, then you need a personal financial advisor. Thousands of us in South Africa. Find somebody close to you if you're comfortable. If you don't already have one, reach out. I can help. So, tons of insurance available. Which one should you select for yourself? Do you need all? Should I buy one now, one next year, one the year after? Well, I have this thing, it's called the hierarchy of insurance, because it gives you a specific sequence in which you should start building up an insurance portfolio based on your risks. And this is how we break it down. Firstly, income protection, because the goal is protect what we have, build, expand, protect that layer. You got a second layer of protection, build, expand, protect that layer. All right. We do it that way because if we're just building, and we have no layers of protection, just one pop, one recession, one missed salary, and that entire thing can come crumbling down. So we want to protect at the various levels, and the first level of protection is our ability to earn an income. And for that, we have income protection. Now, income protection in South Africa ensures that your income comes into the household when you can no longer work for whatever medical reason. The doctor says, right, 6 weeks, no work, bed rest. You broke your leg, bed rest. You have a series of ailments. You're in a major accident. You need time to recover. This is where your temporary income comes into place. Temporary meaning it covers you anywhere from 7 days up to 24 months. After that 24-month period, we're looking at extended income protection. So this can be a little bit of an overlap with disability as well. And traditionally in South Africa, you'll find a lot of advisors selling life cover, dreaded disease cover, and disability. Well, income protection is that fourth leg. And extended income protection is a nice boost to traditional disability cover. The claims criteria for disability and extended income protection is very, very different. It's easier to get a payout for extended income protection as opposed to disability cover, because for disability, permanency has to be established. And if you're looking at your insurance quotes, the very first quote that you've gotten when you took your policy, you'll find that that disability portion will be the cheapest, because the probability of you claiming for that is pretty low. Whereas income protection, it's a little bit more expensive. It's the first tier that you should have, but the probability for you claiming for that one is pretty high. Whether you take a fall, like some of my clients that have taken a fall, missed work, working from home, in a cast and all kinds of things, they're getting paid. COVID, they're getting paid. Tons of stuff that is preventing them from earning an income. My clients are getting paid.
I got paid. I got paid. I got paid. This is by far the best experience I've had with an insurance company.
And in case you missed it, she got paid. The next level that you want to protect is serious illness. And that usually covers things like heart attack, stroke, bypass. And the young people watching me are like looking at me strangely, because this is usually diseases that attack older people. But what's also included in there is cancer. And cancer cuts across all age groups. It's one of the most common critical illness claims in South Africa. Okay, it's something that we can have. And in South Africa, you have that option of having specialist cancer cover, or you can have the the top range comprehensive critical illness cover in South Africa, and that's basically determined on price and risk. Remember, the sicker you are, the less likely you are to get approved for medical underwriting to get all of these nice products that protect you. So that is one of the reasons why we encourage young people to get into this early, to protect yourselves early, because you're getting really good rates. In fact, I did a quote for myself for cover that I had taken in my 20s compared to if I had to take it now. If I take it now, those premiums are 4,500. I'm currently paying about 1,100, 1,200 for that very same cover. Massive difference, only because I took it when I was younger, healthier. So young age and good health is how you get cheap cover. The longer you wait, the more expensive it gets. The next kind of cover you have or you would want is death cover. Here, if you have dependents, this is something you need. Okay, it's not really age related, but if you are 20-something, you have kids, you're looking after siblings, parents, you need this kind of cover. What's really nice in South Africa though, so South Africa is so innovative when it comes to financial products, and you find a lot of our financial products being exported to other parts of the world. And one thing that's really popular in industry now is that clients are moving away from lump sum cover, where they are taking 5 million cover, 10 million cover, but they're looking at income cover, where 50, 60, 70,000 Rand is being paid into the household. Why this is nicer? One, you have peace of mind knowing that whatever happens, you'll still have income coming to your family. All right, there's no risk of large lump sums of money being invested and the market wiping it out. And remember, when you do invest, income in South Africa is taxed. That income will be taxed. So why should your family get after tax money? Life insurance is not taxed in South Africa. So that's another option where you have that life income available protecting your family. Also, when you leave large sums of money to people that are not financially savvy to handle that can easily be lost, leaving your loved ones very, very vulnerable. So life income is relatively new. Many of the premium companies are still not offering it for some reason. Hopefully that will change in the near future, where they give you, the client, the option of lump sum or income cover. And what is also nice is we can give a blend of that cover. For example, if you have a 2 million bond and you have 3 young kids, we can make sure that the bond is covered with the lump sum. And we make sure that the kids are covered by making sure they have an income until age 25, until age 30, or in some cases your spouse, we can ensure that they have an income until they pass. Or even parents as well, that's a great cover to have in place for them if you are supporting parents. Something very unique, again, to South Africa is the ability to future buy cover. Now, if you are a young person, you don't need large amounts of cover. You're just starting out in life. So you realize that you need the cover. You don't need as much right now, but as you progress with your career, you accumulating more assets, your life stage changes, you move through the various life stage, university, graduate, first job, marriage, family, and all of that. At each one of those stages, you're carrying a different level of risk, and future cover allows you to adapt and take on more cover at a very, very cheap price. So let's say you're 23 years old. You know that you have your life planned out, and life doesn't always go as planned, as we know. But there's marriage in there somewhere, there's family in there somewhere, a house in there somewhere, and you'll need 10 million Rand life cover. At this stage in your life, you don't need 10 million Rand life cover, but you can future buy 10 million. How you do that is you pay a fraction of that amount, go through underwriting now, book your 10 million cover, take 100,000, 200,000 to be responsible just in case you die during this time and you don't make it throughout that period. At least you can cover funeral expenses, estate winding up costs and things like that. But as you move through the stages, then you start unlocking that cover. You buy a house, you need 2 million cover for that bond. We unlock it here. Beauty is you're underwritten at that young age in which you pre-bought that cover, not at age 35 when it's really, really expensive. That's a very unique thing to have, and especially with the younger clients, it's so cheap, maybe 20, 30 rands for this kind of cover. It's completely worth it. I wish I had this when I was a little bit younger. Okay, essentially that's your personal risk cover, where you're covering your income earning ability, you're protecting your body from disease and injury. You're also protecting your family in event of your death. Next thing you want to do is start covering your assets. Okay, if you have a vehicle, Typically in South Africa, you would want vehicle cover. Our roads are in a state, people are buying their driver's license. Driving is horrible. You want to make sure that your vehicle is covered. So when you take vehicle insurance, you tell the insurance company, hey, I want to pass my risk to you. And for me passing this risk to you, I'm willing to pay you 800 Rand just for my car. If it's stolen, if I'm in an accident, if I happen to cause an accident, or if somebody crashes into me and they can't pay, I need to know my car is taken care of. That's basically what it is when you do take car insurance. If you own a home, you most likely have bond cover to cover that. And if you're a renter or if you're still living with parents, you could consider contents cover as well. Cover your computers, TV, gadgets, that kind of stuff. So essentially, this is what we are trying to cover, and you have lots of flexibility, lots of options. Now, if you are looking at that personal risk and you need detailed help with that, I'm an independent financial advisor. Reach out and I can help.